focus on three small cap opportunities here. We are joined by Martin Toner, Director of Institutional Research, Growth and Innovation at ATB Capital Markets. Great to have you. Thanks for joining us. Before we get into it, though, you think that this build out of computing equipment, data centers, etc., for AI and crypto, that trend is going to continue?
I think so. And, you know, it's been under pressure lately for a variety of reasons. News like DeepSeek, Microsoft's comments, Alibaba's comments, and some other issues.
What did Alibaba say? Can you remember?
They basically said they see signs of a bubble, somewhat vague, but basically talking about like building it on spec. I mean, the problem is that, you know, we've seen a roadmap from NVIDIA that's 2.5 years out, and it requires, you know, something in the order of, you know, these racks require 5x more power than the previous generation, and so that requires planning because you can't build data centers overnight. So there's a bit of a chicken and the egg, if you will. But I think when you look at if you look at what NVIDIA says, if you look at the amount of compute that's coming, if you look at the decline in the price per unit of compute, there's going to be all sorts of use cases that come out of that. And to date, hyperscalers have only said they're going to spend more. They've not yet said they're going to halt spending. So yeah, that's where the pressure's from. But we think it's a great long-term story that investors should put some money into.
Your first idea is TeraWulf. It's a play on the power, the electricity required for AI.
Yeah. So they have their sole asset is a site that has access to 750 megawatts. It's on the other side of Lake Ontario. So it's sort of like 50 kilometers if, you know, as the crow flies from where we're sitting.
So it's in upstate New York.
Correct. Yeah. And so they're currently transitioning from Bitcoin mining at that site to becoming a data center, a lessor. They have their first customer sign. That agreement is for 60 megawatts. The company is committed to building out 150 or so megawatts per year. And we think this is going to create a nice free cash flow growth story, you know, that's gonna go for years.
Your next idea, it's not really tech. It's connected to tech. Real Matters. Yes. They're a data vendor in mortgages.
Yeah. Okay. So S&P's down 10 here. Russell 3000's down a little bit more. The bottom third of the Russell's down 20% or more, and like it's obvious. The reasons why are relatively obvious, right? There's some macro concerns. This name is a bit of a counter-cyclical play, and because their business, and they're sort of the Uber of U.S. real estate appraisers and notaries. Okay. They benefit from mortgage transactions, so mortgage originations, and especially refinance. And so when mortgage rates go down, their volumes go up. And typically in periods where there's macro pressure, treasury yields go down, as do mortgage yields. And so that's why this stock has at times had a beta about the same as McDonald's, i.e. it's a bit of a counter-cyclical play. When we look at what happened last year, the stock went from 5 to 9 when mortgage rates dropped about 100 basis points from that peak of about 7%. That's what a mortgage was in the U.S. Last year, and then also like a couple of months ago. So this year, the rates have gone from about 7 to about 650, down about 50 basis points. Stock hasn't quite reacted. I think it's a function of just like the implications for housing from some of this macro pressure. But eventually we believe it will respond. And so that's why we think it's an interesting stock right about now. And
Blackline Safety, they're a Canadian tech success story. They export their safety equipment all over the world. Yep. Gas detection is a big part of their franchise.
Yeah, that is their product. And it's a nice organic Canadian growth story, very authentic. And their device is the only connected device in the market. And so when you connect the device, you enable value-added services that look a lot like SaaS, software as a service
You have to
solutions.
keep paying a fee.
Right, and we really like that business model.
Sure.
So does the market, and those business models typically earn higher multiples. This stock, despite having effectively North American-wide leading growth, they actually had the biggest revenue surprise last quarter when compared to the rest of North American tech. So despite that impressive growth, stock still trades at 3.5 times price to sales. When I look at some of the competitors who are much larger companies and are would-be acquirers of Blackline, they traded about 5, and Blackline's significantly outgrowing them. So we really like this company. We think it has also a long duration of growth ahead of it.
Martin, thank you very much indeed.
Thanks for having me.
Martin Toner.